Hey, Renter Retires, it's Adam Schroeder here with another episode, joined as usual by Zach Lemaster, the founder and CEO of Renter Retirement. And we are pleased today to be joined by Liz, one of our investors, and we're going to talk about her journey. But Liz, thanks for joining us.
Thanks for having me.
Yeah, so tell us about your first real estate deal. Kind of where was it with us? Was it before us? Kind of how did you get started in real estate? What interested you, and kind of why are you on this podcast telling people about real estate? I'm guessing that means it's going pretty well for you long term.
It is. So we are very new to real estate, other than purchasing, a couple homes personally for ourselves. But we actually started back in March. We own an HVAC company, and so we have to be very actively involved as far as doing that. My husband and I have very ambitious goals as far as retiring, I guess to say. But so our goal is 55. So we're looking at a 5-year time frame. And so we're really ambitious about it. And my husband had listened to some podcasts and stuff like that. And our accountant had been telling us, saying, hey, you guys need to do something with this cash that you just have sitting there. So he was really encouraging us to do something. And so my husband had been listening to like different podcasts, and your guys' name had come up, and he goes, hey, Liz, take a look at this, do some research on it, and let me know what you think. So I got online, did some research and stuff like that. And I'm like, well, this seems to make sense because I'm really busy. At the time, I owned a coffee shop and I owned an HVAC company. So, and I have 3 boys. So I'm very busy. And I went, okay, so I don't have to do any research here. Most of them have tenants in place. All that stuff's there, and all I have to do is buy the house. That's it. Okay, I can write a check. That's not a problem. So when we looked at it at March, we had said, okay, well, you know what? We don't want to have to be landlords. We don't have to worry about fixing stuff. We don't have to worry about any of that stuff. And we come across, and the 4 that we first decided to purchase was in Alabama, and had all been built within the first year. So we're like, okay, well, we're kind of easing into this, so we don't want to have to deal with the upkeep side of it. And so that was our first move. And then as we started looking at kind of other scenarios, as far as other places to invest, I'm like, well, why don't we take a look at a different market? So we were looking at up in Akron, Ohio, and we're like, I'm just like any good portfolio, you have to be diversified. So for me, I was going, okay, well, we have more new builds over here. Let's take a look at the rehab market and see how that is. So we're actually closing on 3 homes in Akron on Thursday. So because we have such a short time horizon, I mean, we know that we have to be aggressive. Well, my husband is very, he overthinks everything to the point where he can't make decisions. So it's one of those things where I'm like, you know what? You go do the HVAC stuff that you do, and I'll let you know when the signing is, and then we'll just go from there. Okay. It's kind of how all this was transpired. So, I mean, and so far, I mean, everything's been great. All the property management companies that we've worked with in Alabama have been great. It has taken a lot of stress off of me as far as being able to not have to worry about, the tenant issues and stuff like that. Because we work on the HVAC side, we actually work with several property management companies. So from that side, I know what a headache it is to be able to, we have several that we work through, and they're, constantly going, hey, go fix this, go fix this, go fix this. And I'm like, I don't want to be that person that has to deal with that side of it. So, like I said, I can't tell people enough. My husband can't tell people enough. It's like, do something, even if it's your first one, second, whatever. I mean, thankfully we were in a position where we were buying, multiple homes at one time, which for me, it's just going to accelerate, our goals and get us there and make sure that we get there faster. So
your accountant's going to look at it next year and they're like, oh, you did something with that money.
Yeah. Well, thankfully we met with him last month to let him know, say, hey, okay, this is what we've done. And we're purchasing, we're going to be purchasing 3 more. He's thrilled. He actually is absolutely thrilled. He does real estate himself, so thankfully he's very knowledgeable in it. And so that definitely helps us out. So he's really excited to see what we're doing.
90% of real estate investors miss key tax savings by overlooking deductions. Flipping houses, managing rentals, or growing your real estate empire? Make sure you've got experts in your corner, especially when it comes to taxes. That's why we turn to Nevada Corporate Headquarters, the experts who help us reduce taxes and set up our real estate LLCs. With 35 plus years of experience and 17,000 five-star reviews, Nevada Corporate Headquarters helps you manage properties across states, navigate tax laws, and protect your assets, all with a real estate LLC. Visit nchinc.com/RTR to schedule a free real estate LLC formation and tax consultation. Plus, receive a free guide to safeguarding your assets.
That's great, Liz. Well, thank you for sharing that with us. And so much, I'm just like, as I'm listening to your story, I'm going like, yes, yes. I mean, I wish everyone was just like, you hit on so many key points that I think are obstacles for a lot of people getting in the game. I mean, one thing that I've learned about real estate over time is like, so people do overthink it, right? It's at the end of the day, it's like the math and the concept is fairly simple, but often, you do want to, it's a big investment, a house, even though you're using leverage, putting a portion down, like, it's a new venture, it's a high price, like there's a lot of things to think about, and I think some people think themselves out of investing.
Yeah.
But at the end of the day, it's like, to really be successful in this game, it's like you do have to buy. You just, at the end of the day, you have baseline criteria, and you just own real estate. You just buy real estate and then repeat, right? And maybe you critique your criteria over time, but let time do what it does. And at the end of the, like, not every property you buy is going to be a home run deal. There's going to be some that work out better than others, some that surprise you, and some that don't work out. It's like just owning over time and doing things that you can to set yourself up for success are important. But the most important thing is taking action and just doing that again and again. And I mean, clearly, it's good that you have that vision to be able to like be the action taker, right? Even when husband is maybe gets some of that analysis paralysis. But and then the other thing that I think you mentioned just at the end there that's important to point out is your accountant is a real estate investor. He probably has a better understanding of how powerful real estate can be from an investment and a tax perspective than an accountant that isn't a real estate stuff.
Well, yeah, and especially we're in Oregon, and when it comes to taxes up here, they're not very nice to us, and so more so than unfortunately other states. And so when we're looking at the benefits of it, so for us, I'm not looking at the monthly income because that's not what I need. For me, I'm looking at, what the appreciation in the property. That's why, the new builds were like, okay, well, there's going to be appreciation there, right off the bat. But then also the depreciation, all the stuff that's going to benefit us to help us reduce our taxes, even, from our other company. Because now, so I, as I was saying before, so I owned a coffee shop. I actually sold that. So now I don't have that anymore. So now, I can be more of the, real estate professional role and be doing that kind of stuff and focus more of my energy there as well to allow us to take advantage of more of those tax advantages that are out there and be able to utilize those.
You're speaking my language, Lick, and I love it. You're applying all these things like dramatically impactful. And
absolutely,
since you're going, like, man, you're just like you're the key person that we want to showcase to someone that's like, do what Liz is doing if you can. And you don't have to buy 7 houses in year one, right? Like, but you can also apply the same concepts the same way. So now that, you're not running that job, you're actively running your real estate business, which is a business. You're able to do some accelerated depreciation. I'm curious. I definitely, if you're open to it, I want to unpack the numbers with that a little bit and also talk about like mindset of quickly scaling, because if your time horizon is set 5 years, yes, cash flow is not so important like today, but at some point you understand it will be, and you're just going to be in, such a better position. Like if time is so powerful with real estate, like even if you didn't buy another property and I know you're going to continue to invest, but like the fact that you were so aggressive in year one is going to make 5-year exponentially better. You know what I mean? I want to ask you, and before we unpack some of those other things we talked about, I know that you said in March this year, this was your kind of your first forte into investing, and your accountant said, hey, you guys are earning good money, you got to do something with this capital. And he maybe talked a little bit about real estate, but I'm curious to know, Liz, like from your perspective, you and your husband, like why real estate? Was it a lot of the tax benefits you learned about, or there's a lot of things you can do with money and a lot of investments. Talk to us a little bit more about the mindset, like why did you decide to invest in real estate and be aggressive with that?
So in a previous life, I actually was, I did finance. So I'm not adverse to risk, and I understand as far as being diversified. So thankfully, financially, we had already been positioned, where if you looked at the numbers looked great. So we are on track for retirement and all that kind of stuff, but we're still having to be actively involved. And so, through the business, you have to, there's so much to deal with when you're owning an active business, from employees, customers, all that kind of stuff. What we have been looking at different aspects of it, because for us, the rental income, we want to have something that's going to be a more passive income.
Yep.
And with rental property, obviously, having somebody else manage it and do that stuff, it's more of a passive role. And that was the direction we wanted to move in. We also wanted to be able to, history has proven itself. Real estate, they only make so much land. There's only going to be so much, real estate that's going to be available. And especially looking at the world today, most people can't afford to buy a home. They have to rent. Like I said, here in Oregon, the rental prices are more than my mortgage. I'm like, okay, I live in a 2,800 square foot house. I have 12 acres and I'm going, but yet you're paying twice the amount for your little $1,200, dollar townhouse. It's ridiculous. And so there's always going to be a demand when it comes to the rental side of it. So I'm like, okay, well, that makes sense. And for me, not being adverse to risk, I just looked at it kind of like a mutual fund. I'm looking at, and that's what's so great about you guys, those, being part of the academy, you have tools that we can access. Because again, I'm not looking at the monthly part of it. I'm looking at the long term. And I'm able to plug in all my numbers and look and go, okay, well, because one of our houses, we don't really have a monthly income coming off from it. However, when you look at the projections from 5 years, because I'm able to access that, I'm like, well, between the appreciation, the depreciation, it's like, as a portfolio, it still looks good. It still works. It still makes sense. But it's just been proven time and time again, real estate, you're going to win. Worst case scenario, what do? You get something that didn't work out for you, sell it and move on. Just get something else and just keep going. And so for me, it just seemed like a kind of a no-brainer when it came to, moving into the real estate direction, because like, again, we have investments, we have, different things that we do already. So it just seemed the natural progression to move into the real estate market as well and be able to take advantage of it.
Yeah, you mentioned your husband has a bit of the analysis paralysis.
Yeah.
So how did you get him over that? Going one property is one thing, but how did you go to him and say, "Hey, I know you're having trouble getting into one property. How about 4?" How did you break through that? Because we have a lot of people who one person is ready, the other person is kind of dragging their feet. So how did you kick him into signing the papers whenever he needed to sign the papers?
Well, obviously, I didn't open with, "Hey, I'm putting you in a $1.2 million worth of debt." I didn't open with that remark. Obviously, that's not a good way to do it. But I was able. Thankfully, he trusts me, which is really good. And so, I do my research, I do my due diligence, and so when he just trusted me, and I just went, "Hey, you know what? The numbers look good," and it's like showing him the end numbers was a lot better than showing him the beginning numbers. So that way he can see, we make this move. Here's what the projections are, and here's where we're going to be moving.
Yeah.
It just fit. Just because, again, the beginning part looks really scary. So I want to focus on what my goal is, and so that's where we put the focus. So
I love that. And it sounds like there was a lot of like education and discussion around like, yes, actually understanding the numbers, like why are we doing this? And this is where we're going to be, like, not just let's just buy a bunch of real estate and hope for the best. Like, this is the strategy that we're seeing and employing, right? And once you understand it, I think a lot of people just don't understand, the numbers with real estate, and also the strategy of scaling over time and using some of these like creative tax benefits and financing things. And I think understanding the education piece is really important. Liz, talk to us a little bit about the Academy, because this is something that, you don't have to join the Academy, obviously, to invest through our network, but it sounds like you found the Academy to be beneficial. Can you point out a few specific things like that was beneficial for you, your husband, or both?
Yeah, absolutely. So, just a lot of the videos that are on there. So my husband and I, we go to the gym in the evening. And so you accompanied us to the gym most days. So, we listened to you as we were going to the gym. And there was so much good information and so many good things, and, things that maybe we were a little, okay, I don't understand this. Through the other videos and stuff like that, and the other resources, we were able to get the information that we wanted. And again, same thing with, having access to the spreadsheets and all that stuff where you can actually see those projections. You're able to, put all your information in there. It's just the valuable resources that are available. And education is so important when it comes to making decisions. But again, you can't bog yourself down with so much information that you don't make a decision, or you don't do anything. But I think it really helped, especially with my husband, to be able to hear the stuff, to hear all the information, and be able to then see as we're applying it, the end result, and see what is coming to fruition, and see that we're on track through that. But the Academy definitely was, the information that's out there and available definitely was very helpful, very useful. Because, getting into it is scary, because there is so many aspects of it, and even like running a pro forma. It's like, okay, well, when you start throwing out all this jargon, it's like, what does that mean? What does that mean? What does that mean? Well, once you actually start applying it and you can actually see, the pro forma, see what the ROI is, see all this other stuff, it definitely helps to make it, you're able to get your, can't even talk, wrap your mind around the idea easier than not having access to all that information.
Yeah, thank you for that. And that's, I think, our recommendation is that, I think the Academy, the purpose, and at least the vision of it, is that just like you're doing, is that you can use it as kind of a guide as you're going through the actual buying process, because then you're actually applying the concept clearly you're using, and that's where it like solidifies thing. And so many people consume information, to your point, but then they don't take action on the information. It's kind of like useless, right? So that's good.
I think they would say applied knowledge. That's that's what it is.
Absolutely.
Knowledge is great, but it has to be applied knowledge.
And that's just like self-fulfilling for me to hear that you guys found a lot of value in that, because we put in a lot of work into that, hopefully. Yeah. So and hopefully you're in the positive now, because now that you're on seven properties, hopefully you're earning money from that.
Yeah, and that's and we have been, we from day one we were actually in a positive, and like, so, but again, I'm looking at it as a whole portfolio. And that's one of the things is people always have to, like, when I say, oh yeah, we just bought 4 houses in Alabama and we're closing on 3 in, Ohio. And they're like, what do you mean? Did you not see them? Did you go there? And I'm like, no, I had inspections done on all of them, and, I did my due diligence, but I look at it same thing as, when I go and invest in my, in my retirement account or whatever, I'm not going and visiting every single one of those companies.
Yep.
I'm not doing that. That's why I have a fund manager that does all that for me. And so that, for me, that's how I look at the whole thing, is I'm going, okay, well, you're acting as my fund manager. You're doing all the due diligence for me. You're, making sure the stuff's in place. And I just need to make the purchase. And then, keep going on from there. So it's just,
not bad.
Yeah, so far it's been a great experience. And, just like anything, you have a few little kinks that you have to work out, but, I'm chalking that up to my inexperience. So
No, I mean, look, it's a real estate's not perfect. No investment is, right. There will always be things that happen along the way. I mean, I do love the fact that you started with new construction, and I want to hear with some of those, like now, and they were all leased at closing. So, I mean, that's very predictable. There should be minimal maintenance and minimal vacancy, and it's a really good growth market. So I do want to talk about like the idea behind starting with new construction, and now you're diversifying to some different asset classes and locations. So I think it's great. I do want to acknowledge the fact that you are buying in groups, and I think that's really important. A lot of people don't realize this coming in, but if you're looking to build a portfolio rather quickly and do what Liz is doing, which is buying multiple properties, it is extremely difficult to do, just from a time and like sanity standpoint, to do like one property, a couple of months later do one, a couple of months later do one, like the reapplying with the lenders, the due diligence, like it makes, for economies of scale and efficiency purposes, it makes sense to buy in. That's the same thing that I do, because I want to actually buying properties, even though you're going through like turnkey route, like the most time intensive part is going through the purchase and the lending and all the diligence. And it's like I just want to actually like buy a couple times a year, 1 or 2 times a year, and be done. Right. So talk to us about the thought process behind buying in groups, and also maybe any input on buying new construction there, Liz, if you don't mind.
Well, yeah, like I said, the part that seems to take the longest is doing that initial purchase. And so, where it would take us, I think on the new construction side, it took us maybe 5 weeks from start to finish, which still is not real quick. But it's not real slow. I mean, it's from the experience of purchasing our homes, those took longer than what this is taking, it seems like, so, but it takes a lot of, again, for me, the new construction side took a lot of the fear out of it, because one of our fears, again, was, what if we purchase a house and now we're going to have to replace the furnace? We're going to have to replace the roof. We're going to have to do all this maintenance stuff. And so it took a lot of that part of the fear out. And so that was why we wanted to move that direction for our initial part of it. But just getting it done and over with is so much easier.
Yeah.
I'd rather have, if it took 5 weeks, or let's say a month, well, it would have taken me 4 months if I did it individually. Whereas, just getting it done at once is a lot easier.
Yeah, absolutely. I do want to talk a little bit, and to the extent that you want to share, feel free or not, but I do want to talk on you're applying some of the higher level tax strategies, which will make a real big impact on your business and be able to allow you to scale more or quicker. Doing some of these things like accelerated depreciation with cost segregation, which I'm sure, has been a big catalyst of learning about these things and applying the knowledge again. But can you talk to us a little bit about, kind of like the strategy with that, what made you decide to go down that route, and also if you want to share like any anticipated numbers or just like general tax savings, just generally, or?
So at this point, I don't, tax savings, I have no idea, just because it's like, so, but for us, when it came to taxes, again, because of where we live, we have an outrageous amount of taxes that we have to pay. We have all these little extra taxes that we have to pay based on the location in Oregon that we live as well. So, but for us, because we were looking at, how much money we are having to spend in taxes already, we would like to keep part of that money. So for us, the benefits of doing the cost segregation, and that thing is our accountant is thrilled. I'd sent him some preliminary numbers as far as what the cost segregation was going to look like, so he could look at some of them. But he agrees. He's like, we're going to have a significant amount of savings, and where normally I'm writing a check at the end of the year, he actually, he's like, you guys should be getting a check back, and a substantial check, which is, hey, if I can buy another house with that, fantastic. It's, for me, that's what I'm looking at, is I want that savings, so we can now reinvest and continue to build our portfolio with it. So, for us, it just makes so much sense based on our circumstances to put us into a situation where we are going to be able to get more deductions, because I'm already utilizing, all the deductions that I could possibly use already, as a business owner and everything like that. But we need to move beyond that.
Yep.
So for us, it was, going into real estate where we can utilize all those deductions, and it's going to benefit us on the other side as well.
Are you bringing your, you mentioned talking about you and your husband, you mentioned you have some kids. Are you bringing the kids along with it and
So
incorporating them into it at all?
Yeah. So we have 3 boys. They're all actually full adults. And, but they have been interested in, moving this direction as well. So we're showing them what we're doing, and we're like, hey, you can, watch these videos, you can do this stuff. But again, for us, it's, once we are able to move into that passive side, our next step is, now we want to build that generational wealth. We want to build that business that we can pass it on to them and, bring them in. All three of them actually work for us on the HVAC side as well for our company. And one of the things that we're talking about, because we always give them an extra little bonus, at the end of the year or whatever, one, if I'm going to have to pay taxes, and if I can give my children money and reduce the amount of taxes I pay, I'm totally okay with that. We're keeping it in the family kind of a scenario. So, and so what we're talking about is this, instead of giving them an actual bonus for their, how we normally do it, them bonusing them, but then using that money instead to purchase real estate. And the 3 of them can now start owning real estate as well. So, it's just kind of helping, redirect their thought process on it. And, get them moving in a direction that they can now see the benefits, and they can actually start building, wealth for their own families.
That's huge. That's so powerful. And I think, and that comes a lot of times down to the education of it, but the simple fact that they're seeing you do this and understanding the why behind it, I think is extremely impactful. I wish, and probably everyone could say this, but I wish my parents brought me into real estate earlier on, right? Everyone could say, I wish started earlier, been more aggressive, whatever the case is. But I just love that. I plan to do the same thing with our children. They're a little bit younger, but that's awesome. I love that. Just
you can still start Roths for them. So
exactly. Yep, absolutely. Are you? I'm just, because I want to go through an example, not specific to you, but just in general about cost seg, because I know a lot of people have questions about this, and it can be a very powerful tool. Are you also using any of the creative finance options, like 5% down option, or are you pretty much putting 20% down, 25% down?
The 25% down is what we've used on all the properties so far.
Got it. Okay. Yeah. And that's awesome. Not everyone is in a position that has the capital to do that. And so maybe my point is that you can still accomplish some of the same things that Liz is doing with using some more creative financing options with lower money down to, whether you want to expand your tax benefit or your limit on capital, those may be options to explore and speak with your rep about. But just general math, and this is just, again, don't hold me to this because it's very general, but I do cost segregation on every single property I buy. And so if you were to buy $1 million worth of real estate, which is just for, simple terms or simple math here, and you're putting 20% down on that real estate portfolio, which is, 200,000 on $1 million portfolio, because you're leveraging. Usually a cost segregation, we look at on most of our studies, and not removing land or doing anything like this, just looking at $1 million worth of acquisition improvement value. We usually see studies in around 30%. Sometimes, the cost seg engineers will give you more conservative. Most of my studies truly come in, especially new construction, between 35 to 44%. I've had some as high as 44%, but we'll be conservative and use 30%. So 30% on $1 million worth of real estate is $300,000. And in a 100% bonus scenario, 100% bonus depreciation, you could take a $300,000 deduction. This year we're at 60%, which I think is $180,000. Again, being ultra conservative. So, the idea, I think, and I'd be curious, Liz, to chat with you after all your studies come out, but you really should have, in theory, more of a tax savings, equivalent to more of a tax savings than the amount of down payment that you're using to acquire the houses which is crazy, right? That's huge. So, that's, it'd be interesting to see where your studies pan out. But like, that's, to your point, that should be enough capital to really, that you otherwise would have just never seen again, given to Uncle Sam, that you can buy other assets that potentially have additional tax benefits, right? And get this snowball effect. So I love that. Let's talk a little bit about scaling. You've told us that your vision is a 5-year horizon. That's kind of when you want to punch the retirement ticket, whatever that scenario looks like. You're being real aggressive. Like, talk to us about the mind. Like, what does the next 4 years look like for you, likely? And the second part of that is, what advice would you give to someone that's similar situation to yours, that maybe is, not ready for those 7 properties in year 1? So tell us about the future for you, and then maybe advice for someone in your situation.
Well, so our idea of retirement is just not having to get up and actually work every day. So, everybody has different visions of what retirement is, but we just want it to be, we don't want to have to be actively getting up every day to do the job. I want to be able to go on vacation and not have to answer the emails, answer the phone calls, and do all that kind of stuff. So one of the things that even our kids actually kind of wanted to do as well is even if for us, retirement could even be, now we're just flipping homes. So they're doing that, themselves, they're actively do it because they enjoy that kind of stuff. We work in construction already. They're hands-on, my sons are all hands-on. They like to do that kind of stuff. But for us, getting into a more passive kind of revenue for retirement, so we can just enjoy our family. You have kids and you want to be able to spend time with them, and my kids are all grown, but you know what? I still want to spend time with them, and I have, we're going to have a grandbaby here in the next couple of weeks. So we want to move that direction. And so for us, being aggressive about it, so we can enjoy our family when we're still able to do stuff with them. And because we're a very active family in general. We want to, we enjoy going and, skydiving, zip lining, and doing all this kind of stuff. My husband and I are 50. We're actually going to be 52 on our next birthdays. And, we still need to keep up with them, and they're boys, they're in their 20s. That's, the direction we want to be able to do. And we want to be able to help get in a position as well. So they're not having to do what we've had to do, the last, 30 years of our lives. So, I am just so excited about being able to see what the next 5 years is going to hold for us. I think that, because we were willing to take the risk up front and just, we jumped in the deep end with, both feet. We're just like, let's go, because there's options, and a lot of people don't think that, if I do this, there's not an option, I guess, but again, like I said, if it doesn't work out, okay, sell them, move on, whatever, but you gotta take some kind of action. You have to take some kind of action. And even if it's not, if you can't afford to do it all by yourself, most people have people that they know that can help them. Yep. And a lot of the friends that we talk to as well, we're like, you guys need to take a look at this, and, they're like, oh, well, I don't have that much money. And I'm like, okay, but wait a minute, your dad just sold a business. And what is he doing with that money? Nothing. Okay. Get him on board with you, build a partnership. And because there's just so many options out there. A lot of people think, if I don't have the money, I can't do it. Look at all the options out there. There's, again, like you can partner with different people. There's, and again, even through your guys' information that, they give you examples of other things that you can do. I think people just think that it's all on them, and it's not, and that's what's so nice about the resources you provide, is that it shows that it's not all on, that individual. Or even like retirement, like my middle son, because I was already in investing before, all my children have had Roth IRAs since they were like 5 or 6 years old, and they're all in their 20s, and their retirement savings is fairly significant for being, especially for their ages. And they're like, hey, I can use my Roth to purchase homes and do that. I'm like, yeah, if that's the direction you want to move, go for it.
Light bulbs going off everywhere. I love it.
Yeah.
I love it.
Yeah. But I mean, to me, you just got to take action. I mean, if you're somebody in my position where, you've owned a business, you're an entrepreneur and you just don't know what to do, again, join the academy, get the information and just do it.
Love it.
It sounds like you utilize the wealth calculator a lot during your preparation.
Yeah.
Is that accurate? Yeah.
Yeah.
So talk a little bit about that, because I always recommend to people, it's like, hey, a pro forma is great. That'll show you year one, but really you want to look at years 2 through 5, or 2 through 35 in the wealth calculator's case. Can you tell people a little bit about kind of how that helps you more than just showcasing a pro forma?
Well, because the pro forma shows you year one. I mean, that's what we know, right? So when you're looking at it, I mean, and Zach said multiple times, on some of the properties, it's not a matter of whether that property is making money today. Take a look and see what it's going to be doing in the future. And so that's what's so great about the wealth calculator is that you can see those projections. You can put all your information in there and say, again, our time horizon was 5 years. I set the little timer to the 5 years and I'm like, I want to see if I do this and here's my numbers, where are we going to be in the 5 years? And I ran the numbers and it makes sense because again, I'm looking at it as a portfolio rather than an individual, stock, for example, each house to me in my mind, because, that's where I came from. So that it's easier for me to make it relatable as far as going, to me, it's like stocks. Each house is its own individual stock.
Yeah.
Well, I want to look at the portfolio as a whole. So that's when you put it into the wealth, I mean, yes, you can look at each one individually, but I want to see it as a whole and see what the outcome's going to be or the projection's going to be, in the 5 years as a whole. And it was such a good visual to be able to see that. And I think even for my husband, I mean, he's a very visual person anyways, to be able to see that and be able to see those projections, to be able to see those numbers, obviously helps him feel a lot more secure as far as what the decisions that we're making and the direction that we're going.
Yeah, I think that the whole kind of reason behind developing that is, well, frankly, because I wanted one for our own personal use, and we just couldn't find one online that allowed us to your point, not only track performance but also future project from a portfolio standpoint, because it's hard to run numbers, it's hard to run napkin math on multiple properties to project what the outcome is going to be, both from an equity and a cash flow standpoint in a 5 to 10 year period. And I think that really helps to conceptualize, like why we're investing in real estate, because people tend to be a lot of times focused on cash flow and like, all right, well, if I cash flow X amount of dollars per month with X amount of doors, I can have this amount of income. But the reality is that's a dynamic number. Like rent should go up year after year. Also maybe over time maintenance also goes up, right? But also you have the amortization of paying the loan down, plus the home should be appreciating. And then you're like, in the tax, but like you're factoring all these things have an impact from an equity and cash flow standpoint. And so it's hard to run napkin math on that. So that's the whole purpose of building that, is to say, it may not be perfect. I don't expect I'm going to have exactly this amount, but this is like the idea of why I'm investing. And then over 5 years, this is likely where I should be potentially. Right. So,
yeah. Well, you can change the numbers, if you make them more conservative. And if the more conservative numbers work, great.
Yeah.
Which is good because you can change those numbers. And because again, we're new. So I mean, we haven't even been in it for a year yet. So the numbers that we have, I'm just going off from as well as I can guesstimate the numbers to kind of see what's going on. But as in 2 years, I'm going to have real data that I'll be able to use, and I can change those numbers in there. Yep. And get a better, projection of what's really going to be happening. So figure if I go conservative, then it can only be better. So I'm okay with that.
I love it.
But it's just a great tool. I mean, especially to give you that visual, and because it incorporates all of that stuff. It incorporates the appreciation, the depreciation, the increase in your rent, the increase in or when it's, buying down the loan. And I mean, because again, there's so many variables. And if I can just plug it all in there and it spits out a number, it makes it way better for me.
Love it.
Yeah, absolutely. All right. So, is there anything else you want to tell the listeners out there about either, your experience with, the purchase process of rent to retirement or anything like that, or kind of your interactions with with the rep? I can't remember exactly who you've been working with, but just kind of the interaction there. Okay.
Yeah.
Anything else you want to tell people about that?
Well, just being able to have somebody that you can, bounce ideas off from. Like, for example, this last one, I was asking him, so during, I know typically, you've already kind of negotiated the deals and all that kind of stuff as far as the price. Well, so I asked Tom, we actually did instead of them doing the year free on the PM for the property manager, I actually asked him, I'm like, well, we just give me a credit at closing instead. Because it's the same for him. It's actually less money overall for him by the time it was done. But I'm like, but then I'm not using all of my stuff for the down payment. He's helping me on the down payment side, so it was still a win-win.
Time value of money, getting your capital back immediately, right?
Yeah,
so, yeah.
Absolutely. So, so it made sense. So there's different things we can do, but I was able to, communicate with Tommy, and which was great though, because it was when you guys were also at the Deeper Pockets conference, I believe. Yeah. And so, I could shoot him emails and, when he's on a break or whatever, he got back to me. And so it just makes the process so much easier to have somebody that I can, especially the first time, when we were doing the 4, because again, I had no idea what I was doing. I'm just like, I haven't, what's the next step? What do I need to do now? And, he was right there holding my hand, taking, saying, hey, okay, do this, do this, do this. And it just made the process so much easier. It was, really, it was quick and painless. And this next time around, when the homes that we're purchasing now, I think we're going to be not even 3 weeks, because we were supposed to close on the 18th and we're actually closing 10 days early. So, that was, a really easy process. Same thing with the lender, from the lender side, the people you guys put us in contact with, one, because they know you and they know how to work with, rent to retirement, and they know, they have access to things that, me not having any idea of anything, when I'm going into this, they're able to help us through other stuff that, maybe I didn't even think of or didn't realize or whatever. But it's just having you guys provide us with the resources to be able to make it an easy process while learning and everything like that. Definitely cannot recommend it enough. We recommend, rent to retirement to our friends, our family, and saying, hey, you know what? We were in the same place as you. We didn't know what to do. We were scared, we were nervous, but they took all that out of it because of the stuff that they have available for us. I wouldn't want to do any of the market research on someplace. I'm like, that's overwhelming, but you guys are doing that. And Tommy had sent me numbers, when I was looking at the ones for Akron, he had sent me some, some information and stuff like that was already collected. So I could utilize that to help make the decision. So, you guys are helping with, providing the resources to make it so much easier, and just help give us the confidence to be able to do this and to take the right steps in moving forward and building our portfolio. So it's definitely been, it has been I'm going to say hands down, probably a very blessed experience to be able to get in contact with you guys, to be able to help us, make the decisions that are going to align with the goals that we want for our family.
Well, we certainly appreciate that, Liz. And we can provide as much information and market data and have all the conversations in the world. But at the end of the day, you're the one taking action, right? You're the one that's carving and forming your future and, making things happen. So we love working with people like yourself that are that are go-getters and consume all the information that we try to put out there, because we put in a lot of information out there, right? But then you're taking all of that and then you're crafting a plan and then you're following the plan. I just love it. We were tickled pink to have you come on here, so really appreciate your time.
Yep.
Well, thank you for having me. Definitely.
Absolutely. And you can find all these properties that Liz is talking about, of course, at renttoretirement.com. That's renttoretirement.com. You can schedule a call with us, see the inventory. You can check out the academy. It's all right there on the website. As always, if you have any questions you want us to answer in future episodes, send them on over to podcasts@renttoretirement.com. That's podcasts@renttoretirement.com. Really appreciate the time y'all spent educating yourselves today. We'll talk to you on the next episode.
Thanks for watching the Rent to Retirement YouTube channel. Check out some of our other videos, like this one, or this one here.